moderator, our panelists, and all the ones who joined us online. Thank you.
Thank you so much.
So, ladies and gentlemen, on that note, it is now time for us to move ahead to our next conversation. Let's talk about achieving global competitiveness, tech, finance, and the sectoral strength for a global India. India needs to look beyond, and I'm sure that whilst as many of us in the room are aware of Viksit Bharat 2047 as a theme, we believe that the current panel is going to throw their light as to how India becomes globally competitive. For this conversation, our moderator is Abhijit Lakhule, who's the partner at KPMG, bringing his strong expertise to the platform. We're also going to be joined by our eminent panelists, Arun Singh, Global Chief Economist, India, Dun & Bradstreet Information Services India Limited, Uma Sistla, the Independent Director on various sports and former MD and CEO of SBI, SG Global Security Services Private Limited, VK Mishra, Chairman, Global Technology Network, India China Technology Transfer Center, as well as the Executive Vice Chairman, India China Trade Center. We have Tirthanarkar Patnaik, who's a Chief Economist at NSE, who's going to be joining in. Sandeep, who's here amongst us. Sandeep Parwal, the MD and CEO of SPA Capital Services Limited, and Mr. R. Kannan, Corporate and Economic Advisor, ex-Hinduja Group. May I please request and urge all our panelists and our moderator to please join us on stage, and whilst as they're walking towards the stage, just a few lines about our moderators and the panelists, please do join in. Dr. Arun, of course, the Global Chief Economist at Dun & Bradstreet, brings in more than 20 years of experience. We have Uma, who has a distinguished career in banking and securities industry. We have VK Mishra, who's of course the chairman of the GTN and also plays a key role in promoting innovation, technology collaboration, and international partnerships. We have Mr. Dr. Patnaik, who's a chief economist at NSE, seasoned macroeconomist with over 2 decades of experience in economic research. And of course, Mr. Sandeep Parwal, a passionate entrepreneur known for spearheading strategic initiatives and operational excellence. And we're also joined by Kannan R., who's a seasoned corporate and economic advisor with extensive experience in strategic planning and global business services. He's also a member of the Harvard Business Review Advisory Council, reflecting his thought leadership and global professional recognition. With that, I'd like to leave it in the able hands of Abhijit to take it forward. We do have Uma and Vijay, who I believe have joined online. So a very warm welcome to all of you. And I'd now like to leave the live to Abhijit to take it forward. Uma and Vijay, can you hear us? We just want to reconfirm.
Yes.
Yes, thank you.
Okay, perfect. Thank you so much. And to the moderator, Mr. Abhijit, we're just going to be keeping it short and sweet. Of course, it's saying 30. I'll get it, of course, revised to 35 because it's a bigger panel.
Yep.
Over to you.
Okay. So 30 minutes should change to 10 minutes now, and then back to 33, which is good. Let's keep adding that, 35. Good. So first of all, a privilege to be on the stage with people with such an heavy experience. I think I've gone through your LinkedIn profiles, and it's going to be difficult for a lot of us to digest a lot of things that they're going to refer to. But as a moderator, it's going to be my job to make sure it is in sync with what people will understand. So I'm going to apologize in advance for certain things that I may not understand when you respond, but I'm going to ask questions, a lot of them, right? And I think asking questions is one of the most important things for Viksit Bharat, right? So I'm going to do that job. So apologies in advance, and also thank you for letting me host you. I think let me start with Arun Singh. Arun, you're an economist at Dun & Bradstreet. I know the budget has been focusing on a lot of sectors, defense, renewables, technology, and so on and so forth. You know, in your opinion, which are those sectors that are actually right now competing with global priorities, which should be the focus area and are capable of really fighting the global fight of sorts. And then probably Mr. Kannan, if you can throw some more light on those priorities, please.
Thank you, Avijit, and I think thanks for Mr. Narendra for inviting me here, and I'm privileged to be part of this gathering. So, answering to your question, if I have to pick one sector, that's basically I will not be able to do justice, to be very honest, because today what's happening in order to make a really inclusive growth and make a growth really committed for 2047, we need all the sectors, all the segment, all the part of the economy to work together to accelerate this growth framework. But since we are talking about the priorities, and that priorities should be aligned with the global, I choose pick three things, three broad element. One, of course, the defense. Second is the energy, and the third is the tech-enabled financial services. These three things are really going to drive, and this syncs with the global priorities for sure. Today, what's happening? These are working in a, in a sync and going to make India really adapted to what we're looking at by 2047. Now, what is required at this point of time that none of these things is possible when we don't have what we call the reliable energy, reliable or sustainable energy. That's one thing. Let's start with UPI, the Financial Services Tech Enabled. I think we are leading the game. We are leader in that segment, and today I was looking at one data by August 2025, 2 billion transactions on the UPI. That's not a small thing. That's one of the biggest transactions we have seen any country or any world in terms of the financial transaction talk about. So there's a structural change happening. This is not a transition. This is not just a movement happening. There's a structural change happening. It's not about ease of transaction. It's not about ease of financial success. Is basically transaction cost coming down. MSMEs are basically more involved. There's a financial inclusion happening, and that's are basically in the line with the, global priorities. Now, that is why I'm saying, because global companies, global countries are basically looking at a payment without any friction. They're looking at payment without too much of cost. They're looking at payment across the border seamlessly. So I think there we have one edge. What we need, those digital infrastructure should be supported by the physical infrastructure, because in a global fragmented world where geopolitics are playing a really good game changer. Countries are looking for the new partner. They are looking for the partner where basically got a port capability, got a better infrastructure, got a last mile connectivity, industrial corridor, or maybe a industrial cluster, the transport corridor. Everything's basically has to be there in order to leverage that. At the second part, I think defense, I talked about. Defense is not just a strategic priority. Defense is not just a strategic element of any of the country. It's a basically industrial policy. And looking at the Atmanirbhar Bharat, I think we are very well placed in that. And all the countries looking in a sync that they are looking for a trusted partner, reliable partner. India as a country can play a really big game changer to attract those investments. And the third, that's energy basically. Today, if our energy is not sustainable, or today if energy is costly, today if our energy is not green, then possibly nothing is going to be a success. So I think there is a good enough focus in the budget towards that, because what we have, what we are having today, this carbon adjustment border mechanism, that's going to tax your import or carbon at border. And if your export having those carbon stuff, basically you're not going to be competitive anyways, with the FTA being placed with the EU. And I'm going to quote one data. So in 2024, out of 100 inquiries coming from the global to do the trade with Indian companies, only 7% of those inquiries used to be from Europe. And this is before EU FTA being signed. Today, even before EU FTA being signed, that data from 7% shot up to 33%, which means out of 100 inquiries coming from the global to do the trade with Indian company, 33% of that is coming from the Europe. Look at the mechanism. If we are not green, if you are not sustainable energy, possibly it's not going to be a focus towards our global leadership or global growth story. I think we are doing a lot of things in the renewable energy and all that, but need is to how we channelize the energy, have the storage capacity, have those basically transmission, and have everything to ensure that each and every aspect of industry are aligned to the green target. Thank you for that.
Thanks, Mr. Singh. I think, Mr. Kannan, I'm going to take some leeway from what Mr. Singh said, which is digital infrastructure, which is a priority order for a lot of these things also to enable, right? Now there are sectors, and especially there are certain sectors like handicrafts, there are sectors like agriculture, manufacturing, logistics, where digital infrastructure, however, whatever said and done, is not that, is not that enabler of sorts. And then add to that the energy part, which is if you have to get into a EU FTA, you have to have work based on renewable energy, on less carbon footprint. Our question to you is, do we have enough investments in digital infrastructure, in renewable energy today? Or are we spending time on the rest of it and not the enablers? And what are the top 2-3 enablers that you think are really, really the missing link today?
So this session is about competitiveness. So whenever you talk about competitiveness, it comes from two sources, mainly your physical assets as well as intangible assets. When they are combined and blended and used, then it becomes a competitive edge. So if you see India, we have become globally competitive. Last year, if you look at incremental GDP in the world, India became number 2 after China. We overtook USA. Why US came and said they want immediate FTA with us is, one, we overtook USA in terms of incremental GDP. Second, what happened was that in BRICS we are talking about, we want to create a CDC to be exchanged between countries. Third, we signed India UU FTA, and of course Chile and other FTAs are very powerful. So coming to enablers, we talked about digital infrastructure. Yesterday there was a very extensive discussion on digital infrastructure in the financial services space. If you look at total digital transactions in the world, 2024, India had 48% of global transactions. I think 2025 figures must be out now. Ours must be 53 to 54%. Of the world total number of digital transactions, we are already 54. The cheapest way you can transact through digital is in India. That's one. Second is, he talked about MSMEs and agriculture, etc., etc. MSME, I have given a big note to the government about 9 months ago. How MSMEs should be supported. That's going to be one of the main drivers of our Indian economy. I suggested that whenever you look at national growth, we always talk about developing what is called industrial centers. So all these should be in clusters, MSME. We already have clusters. So already I think in the budget, there is a provision where government is planning to support these clusters in terms of financial planning, etc. So there can be a guidance to these 500 or 600 clusters where most of the small enterprises fail because of the financial management, working capital management. So they can be guided on tax planning, they can be guided on availing concessions. The awareness level is also very high. Not every MSME is getting it. And third, in terms of, some of the corporates, since they have high volume, they are able to buy products at 1/3 of the price of what others are buying. They have the sheer volume. So we said that these 500 clusters, government can facilitate whenever they buy raw material. They are doing the same thing. They can buy this raw material at half the price or 1/3 of the price which they are buying today. Similarly, marketing, if you look at marketing, instead of each MSME going outside, all of you are aware that companies like Amazon are helping MSMEs to go global. Already they have registered 1,50,000 merchants from India. Amazon is facilitating their exports to other countries. So there can be a single marketing focus for each area. So when you talk about digital stack, we only talk about finance. All of you are aware, this year, the performance of transmission sector in India has improved a lot. Government has come out with a new scheme called Power Stack, like digital stack. Similarly, they are thinking about agriculture stack. Then in terms of pushing, what has happened under Department of Science and Technology, they created a new entity like Aadhaar entity, which is going to support deep tech technologies, deep science technologies, high-tech technologies. So this gentleman, I think he was in US in the universities and worked in TCS. He is the CEO. I was attending a 2-day program in IIM Ahmedabad last month, where they are talking about how they are going to kickstart the investments in space sector, defense sector, deep tech, biotech. So all that is happening. So if you really see, India's competitiveness is only going up. There were little gaps which we are trying to fill up. We are not manufacturing semiconductors for a long time. We are doing it now. Artificial intelligence, I was told in terms of number of engineers, Infosys alone has trained more than 300,000 people. In fact, today I'll be releasing a note on what is this 5 IT companies should do, how they should restructure. I already prepared the note. How they have to restructure their business and they can survive. So if you ask me, a lot of enablers are in place today. So and one more thing today, what I find is that implementation is very good. And there are good schemes. And I hope this will really give a big push to India's competitiveness.
Thank you, Mr. Kannan. And I think it's a positive note that there are enablers already there. And with the cluster program, it only enables a lot of these smaller scale entrepreneurs / MSME to really utilize a lot of these benefits, right? And I'm going to pick you up again on the point of SaaS models that are going to change in our tech discussion, which I lead with V.K. Mishra sir later on. But Mr. Patnaik, I'm touching base on the FTA part, right? And like Mr. Singh mentioned, that almost 33% of our inquiries are now coming from the EU corridor. Where do you think, given the priority order of the budget, given the enablers that we already have, which are those top 5 sectors, almost like top picks for the next investments in the scripts for us, are those where this EU FTA trade is going to benefit the most?
So Abhijit, the one thing I cannot answer is recommend any sector.
Of course.
The one thing that I cannot answer is recommend any stocks. And I think my fellow panelists have done a great job in terms of explaining, and Mr. Singh did it very well, in terms of how with the FTAs, this is better, how with the FTAs things will improve in India.
Yeah.
But I must point out to one of the observations made by a fellow economist in a previous panel. He said FTAs are good, it's fine, but in terms of we should not see them in terms of the tariffs that they have. In terms of tariffs, we are actually feeling happy that we came from 50 to 18. But please note that we were not at 18 a year back. We should understand that part. If the entire episode has led us to a conclusion in places like an EU FTA deal, where the discussions were on for 20 years, and now finally they're done. The EU, Ms. Ursula von der Leyen actually called it a mother of all deals, and there is a high amount of what we economists call complementarity. That covers the EU FTA deal. It covers nearly 99% of all our exports, and this is the largest deal signed by India as well as the EU from the other side. So we need that kind of trade understanding where our exports get the markets which they are ideal for. The other thing we should also think of is if exports make, if a trade deal makes certain imports cheaper. Think about the US deal here. So we face 18% tariffs, US has 0% tariffs. But if that makes our intermediate goods cheaper, that also helps us. So the point here is how can our exports do better going forward? The composition, as Mr. Kannan very rightly pointed out, of our trade, and actually I will go one step back, our trade and services has been changing significantly. We are doing over $300 billion of services exports a year. It will not be far when we come to a day where we will not depend so much on merchandise trade versus our services trade, which will become much, much bigger. So we are in the right direction. The important part is to bring the right thinking, which I believe is very happening right now.
Thank you, Mr. Patnaik, about this. Ms. Sisla, I would like to come to you on a specific point, and I'm slightly digressing from sector into confidence that the global investors look into as India, right? Obviously, in the last 2 years, the FDI and FPI has been on slightly reducing rate. Now, I work in financial services. I've been doing this for the last 18 years. And I've realized that financial services, bad or ugly, or good or best, we still get a lot of FPI, right? But that's a sentiment which is very much different because economics play very differently when it comes to financial services. But as a market called India, it's not just financial services, but a lot more. What do you see as the key enabler that will make it a safe and, more importantly, a longer-term investment opportunity for the global investors? And do you see, and I think in the previous session, one of the economists did mention that with the FTA, etc., that was signed, a lot of FPI is expected to come back to India. Your views on that?
Thank you so much. I hope I'm audible.
Yes, you are.
Yeah. Thank you so much for this opportunity, and to NQ as well. So this is a question which is oft repeated. I feel that, if you have been in the financial services for 40 odd years and then periodically at different points of time, it is the same question that we are asking and answering and working towards. Periodically, we see FPI and FDI withdrawing a lot of money from the markets and then coming back and then again going back.
Yeah.
This is something that we have experienced, most particularly because my last assignment was in the services, security services segment, where I was a custodian of assets for both foreign and Indian investors. That year, the year 2022-23, we lost almost 3.5 lakh crores of assets under custody from the foreign investor segment itself. And it was such a big, difficult thing for me to explain the downfall in my performance as well, because irrespective of what happens in the markets, you are supposed to keep up your targets.
Yeah.
And you will find that there is a lot of, discussion in the public domain, published information in terms of what are the reasons why investors go away from Indian markets and why do they return. There is a lot discussed about, and all of them are true, the regulation not being very conducive, and the regulation playing a supportive role, that is what is required. Taxation being a prohibitive step, and then that the taxation norms have been relaxed, so they are coming back, and the sectors are not favored, and then again the sectors have become attractive, so they are coming back, and so on and so forth, and all of them are true. But what I'm going to bring to light is some of the discussions I used to have with the foreign portfolio investors while marketing for their business in India. One thing that is that had come very clearly in those conversations for me was that they actually don't bother about this taxation. They don't bother about the cost of investing into India. What they look at primarily is the IRR, how much money they can get back. And if it's a growing economy where there's a good growth story and you are making a very good return, then some amount going back as a cost is not a problem. The net IRR, the IRR that they get, if it is good, meeting or exceeding their expectation, they are very happy to pay the cost. The problem comes when the growth is not so high, the valuations are very high, you enter at a higher valuation with a strong rupee, and when you are wanting to exit, you are going out with a cheap rupee, and the return is not really high, and that's when the taxman pinches. That's when the regulatory barriers pinch you. That is the story now. The story now is that the lot of interest that the investors had, particularly the portfolio investors had in the derivatives market. A part of it has gone down after the derivative regulations have been tightened. Then, of course, the valuations became very, very expensive, and the growth is not as promising as it was a couple of, let's say, 5-6 years ago. And that's one part of it. And another part of it is the emerging market story. Today, of course, somebody else in the previous session also talked about Vietnam, and just see the agony an Indian can feel if you have to compare your large economy with an economy like Vietnam and still feel that they are doing much better than us. It's actually a painful reality. So you have an emerging market fund which you want to invest in emerging markets because there is better return, and then you find that there are 6-7 countries which are in your target group, and you find that one of the countries is doing much better or two of the countries are doing much better. So you're tempted to shift your investment from this country, which is giving you lower return, to country where you possibly have a better growth story. And we also have to accept that we are now at that level of growth where we have seen a substantial higher growth momentum, and we go through a consolidation phase, and then again we go to the next growth momentum. So sometimes you have these cyclical withdrawals from the foreign investors, and then, but thankfully now the domestic sector is doing very well and supporting the markets, unlike a couple of decades ago when the foreign investor vanished, the entire market crashed. It doesn't happen anymore. So this being the positive story, how do we support ourselves going forward? One is that the valuations have to necessarily be what they are. I mean, they have to come closer to the reality. The valuations have to have a growth story within them for the investors to come back. And I would also add one backstory that we have seen, that at least the last couple of years, we have seen so much bad news from the startup universe. Yeah. See, when we think about a safe and attractive investment environment, a speculative investor like an FPI who is coming into the secondary market is obviously willing to take some risk. But what is safety for them? Safety for them is that an environment which is not having scams and frauds. And that's what we have seen in some of these, segments in India. And the issue is when it is a scam or fraud, yes, the regulator gets into the act and then curbs them or try to put some preventive measures. But if something gets into the legal domain, then you have there is no end of the tunnel there. I mean, that's the kind of legal system we have. So that is definitely a very unattractive proposition for an investor. So we need to ensure that not only the regulation and the taxation are conducive for a foreign investor to stay invested. The corporates who are seeking investment have to be much more disciplined, far more well-governed, and they should, and there should be some system of preventing this diversion of funds when people come with a lot of expectations into the startup universe and then they divert the funds and then you have nothing to fall back upon. Yeah. So I think these are the areas where we need to necessarily focus on. Got it. But then the emerging market story, in one of the previous sessions also it came to light, the emerging market story will slowly fade away. We will be one of the developed economies. Therefore, we have to get into a different mode of play, both in terms of regulation and in terms of tax structures. Got it. And
Ms. Isla, I think thank you for that. I think you have covered a lot of my other questions when you responded to, importantly, the speculative trading. And to the audience, I mean, it is really injustice to the panel here to have a ticking bomb here in front of us, because there are so many topics that I would love to talk on for days with all of them. I'm pretty sure I'm going to ask everyone to give 1 hour of their calendars after this panel. Yes, no, I'm going to go to Mr. V.K. Mishra, but before that, I want to go to Mr. Sandeep. Mr. Sandeep, ma'am also did mention about the equity markets and how this thing is. I think one of the most unexplored markets in the country today is the bond market, right? Mr. Kravis yesterday has been quite everywhere on the news of Indian media, right? What's your view? And very quickly, I think I want to also cover AI in a very detailed manner with Mr. Mishra. But your views on the bond market and whether it will give us a competitive edge globally in both FPI as well as the domestic money getting into the corporate bonds, right? And Madam also mentioned about IRRs. Now, here is where the entire dichotomy is. With a reducing rate, your 10-year G-Secs are still at higher yield as compared to even SBI's prime loans, right? So there is a significant amount of IRR sitting in the bond market. Your views?
As far as the bond markets is concerned, I believe that the opportunity and the scale is huge.
Yeah.
The potential is very large. It is just that understanding the risk and evaluating the risk in a wholesome aspect. And especially coming to the risk component related to delays, defaults and other things, or the sustainability and the repayments related to that. I believe that that risk has not been appropriately priced in, and there is a limitation in terms of coverage of those risks.
Yeah.
The credit default swaps or the other things are not easily available and accessible. Actually, they don't work practically from all aspects.
Yeah.
The potential in terms of liquidity and certainty for the potential capital for to be protected and a return to be generated, over there has a gap. It's easier to invest maybe with the development of mutual fund industries in an instrument which is properly managed than by an individual to be managed. And then while the institution piece with the mutual funds and maybe now the new AIFs and the other structures is emerging very well. But is it completely clean and transparent? There are separate challenges related to that. The taxation now, which was supposed to be a promoter for the segment, at least on the mutual fund piece, again I come back to that, is now again being neutralized. The banking lobby has been strong enough in terms of equalizing the same aspect. So investors' perspective, while remains very strongly for protection of capital and generating a return which outpaces the inflation and something additional over there, the alpha can be created, but there are uncertainties related to that, primarily because of liquidity and lack of transparency in the domain, which needs to emerge. And then will the bond market come for when the country moves forward and it develops? It has to be a certainty. It cannot be an option, because the interest market and the related things have to be a part of the growing economy and a moving economy. So that is what I believe, that this has to be there, but then perhaps it will take some time before we can really get into a transparent structure.
Understood. Understood. I'm again, I hate to say this, but I'm mindful of time and I'm going to quickly, but this was really helpful. In terms of bond markets, just few snippets of it. Globally, bond markets have gone through multiple cycles. Like ma'am was saying, the periodicity and the periodical things that have happened. India has not even seen half of that in its lifetime of capital markets, which is a new age to come. And I'm guessing somewhere some of these regulations will obviously help. But I'm just going to go to Mr. Mishra, and I'm going to move complete gears to tech. Mr. Mishra, you work in the China corridor. You also work with Global Network of Technology and so on, so forth. Sir, quick question. It's all about predictability and it's all about data at the end of the day, right? There are a lot of sectors in this country where data is still being created and then it will be mined, right? And then on top of that, I'm adding a question of AI. For AI or a large language model, for having enough data, are we ready there from an infrastructure perspective? Are we ready there from an adaptation perspective? And where do we stand in terms of actual adoption and not just creation of models?
Thank you for such a nice question. First of all, congratulations to Mr. Naren for organizing such a wonderful conference with such a wonderful audience. I am missing that by some compulsions. As this question about the data, first of all, we should understand that we are importer country, so we are importer of technologies also. So it is very important for us before entering into AI world, where yesterday our Prime Minister has tried to match the race which we are lagging behind in the AI. So the big conference is going on in India, and this is 5-day affair of AI where many top shot AI people are already present in New Delhi. So we need to understand that our technology competitiveness, where we should go from import to cooperation with various countries and various technologies. Then, secondly, the most important thing is having own innovation system. Unless you have own innovation, you cannot even cooperate. Thirdly, we must protect our intellectual property, and we should not depend only on one country for collaboration. Be it Europe, be it China, be it Japan, we should be very widely having considerations. And also, we should think that we cannot choose every area for cooperation. We need to be selective. We need to prioritize it, like green energy and EV, everything is going on. So now it is directly related to our data generation. What is happening? That data is around us. We are collecting data everywhere. Data is gathering everywhere. And we are the largest, one of the largest after China to having various kind of data. But who is going to standardize it? We don't have even standardized industrial data. So first we should focus on standardization of our industrial data. Then we should build industrial digital public infrastructure, which is one of the most important. Although UPI has given us a good success and also a way forward, how we can achieve success by building good digital infrastructure. Thirdly, the digitally integrated MSMEs, because our MSMEs are lagging behind in this whole internet system. So we need to cooperate in a big way, and government also need to support it by subsidizing so many things so that MSMEs can really cope with the whatever gap has already been created. Fourthly, our data governance and trust need to be strengthened quite strongly. And another important aspect is integrating and aggregating infrastructure data, because without that, it will not be a grand success. So getting grand success, the most important takeaway today we can have that AI readiness is not only about creating a smart algorithm, rather about building a strong data system. India builds a secure and connected industrial data system, automation will benefit, and the whole entire ecosystem of Indian data system can have a growth, not to limited to large companies. As I mentioned, the MSMEs need to be part of it so that all can share this data generation and converting it into artificial intelligence for the benefit of common man. So with any development of science, if it is not useful to a common man, it is not going to be ultimately having successful path. So this AI story is directly related to the benefit to the common man, how this is going to really benefit common man so that it can really have an impact of its results all over.
Thank you, Mr. Sir. I think I wanted to have like 3 questions per panelist, but it's restricted to 1. But I'm going to take this opportunity to summarize in 30 seconds. On behalf of everyone, and apologies, and it's a privilege to be able to do it on their behalf, which is so I think Mr. Arun Singh did mention the confidence in certain sectors, and I think Mr. Kannan also did mention that there are a lot of enablers, including clusterization and so on and so forth, which is enabling these sectors. I think, ma'am, you clearly helped us understand that this is a wave, and you've seen multiple waves, and this is an optimistic part where some waves of FPI reduction are going to happen, but then obviously things are going to come back, which is where, again, I go back to capital markets and the market making, where Mr. Patnaik comes into picture, where, you know, there is a fair amount of depth that we are seeing in the market. There is a lot of potential new products that are being created. I wanted to talk about Gift City, but then that is for some later conversation in the next panel, maybe someday. Mr. Parwal, I think you did talk about bond markets is a new phase of things. And then eventually, Mr. Mishra, I wish I could have more conversations with you, but tech will become a backbone of this country in the next couple of years. What used to be 10 years is now 2 years, right? So I'm pretty sure that is a closing note on things are going to move really fast, like our time. So thank you for your patience here listening. Thank you, ma'am.
Thank you so much. And ladies and gentlemen, with that, if I may request all our panelists to please step forward. Firstly, a big thank you to our moderator, Abhijit, for conducting and curating this conversation. Of course, we have Uma and Vijay in the background still. Please do stay around because we would want you to be a part of the group photograph. So we would want you to keep the cameras on just for another 2 minutes. We're, of course, right now felicitating all our eminent panelists on stage right now with us. We have Arun, we have, of course, our panelist Sandeep Parwal, Mr. R. Kannan, Mr. Patnaik. Everybody is here with us in person, and of course, Mr. Mishra and Ms. Uma, who have joined us online. And whilst as they're with us in the background, we would want all our panelists to step forward and get them to be captured on the screen along with them in the background. Ladies and gentlemen, if you've enjoyed the conversation, let's continue that applause for all our panelists.